The widely anticipated Renters' Rights Act has received Royal Assent, and it will become law in just a matter of weeks. And let's be blunt, depending on what type of property you own, this is either the start of a professional golden era or the end of your portfolio in its current form. If you're sitting on high-end, future-proofed quality properties, this new legislation will benefit you. But if you're holding on to low-quality, unmodernised or poorly managed properties, this legislation potentially turns your portfolio into a huge risk of financial burden. I'm Judy Halliwell, and with 20 years of experience in UK property, I've helped hundreds of global investors navigate between major legislation changes just like this one. So in this video, I'll walk you through what's actually changed in the Renters' Rights Act, what this means for your property rights and rental income, and how to position yourself going forward. Before we talk about the law, we need to talk about the headlines. The biggest risk isn't the act itself, it's if landlords and investors choose to bury their heads in the sand and ignore the fact that the bar is being raised. Some may say this is anti-landlord, but I disagree. The government is effectively using property standards to force low-quality housing out of the market to benefit both UK tenants and landlords. For example, if you own a property that struggles to hit a good EPC rating, or one where maintenance has been neglected for years, then yes, your property is now a target. The new Act focuses on three key areas. 1. An open-ended flexible tenancy structure. 2. An increase in property standards. And 3. Defined documented routes for possession of the property and recorded communication with your tenant. Let's talk about one of the biggest headlines surrounding the Renters' Rights Act at the moment: the abolishment of Section 21 no-fault evictions. Moving to periodic, open-ended tenancies means you can no longer simply refresh your tenant base at the end of a fixed term. You need tenants who want to stay for 3 or 5 years. And here's the truth: high-quality tenants do not stay in low-quality properties. If your property is very low tier, with basic finishes, poor insulation, or dated interiors, you are risking facing a revolving door of tenants. Under the new rules, they can leave with just 2 months' notice, meaning you may face greater void periods and re-lettings cost, which would ultimately decrease your yield. In contrast, if you own a premium asset, this law actually protects your yield. Tenants fall into a habit of staying, and consistency equals returns. So my advice? If your property doesn't inspire a tenant to potentially stay for half a decade, it's maybe the wrong property. So, the Act is most definitely raising the bar on property standards, and this is where it gets expensive for the wrong type of property. Lower quality properties that can't meet the new standards will be forced out. This creates a drop in supply, meaning demand for premium rental stock will increase. If you own a lower standard property right now, you have two big choices: spend heavily, bringing it up to a future-proofed premium standard immediately, or exit the property now while there is still a market for it and pivot into a high standard development that can meet the new requirements. Holding a low quality asset in 2026 is a huge risk, so make sure you've fully thought out how future-proofed your investment is and if it's time to upgrade, as this change is inevitable. Now, another major concern and headline is about the control of properties. Landlords are worried that they're about to lose rights and powers. Now, the main takeaway is that they most definitely are not. They're just now required to be professional. The new Act actually benefits reputable landlords and provides clearer, more defined routes to recover your property, but only if you have the paperwork. For example, if you want to regain your property due to a breach in tenancy contract, or if your circumstances change and you and your family may want to live in the property, this is still completely possible. Your property rights are legally protected. There is just a more rigorous process to follow. Now, every conversation, message, and transaction needs to be correctly documented, meaning good quality professional property management isn't a luxury anymore, but a necessity. But the good news is, this will actually create a more transparent system for both landlords and tenants. The Renters' Rights Act isn't as scary as the headlines make out, nor is it the end of a buy-to-let era. It's simply bridging the gap between landlords and professionalism. By owning a premium, well-managed property, you will actually benefit from new legislation, from a less saturated market and higher tenant demand. My final piece of advice is to look at your portfolio. If any of your properties feel like a risk under these new rules, it might be time to call it a day and move into something more premium and follow what I call the flight to quality. If you want to speak to my team about pivoting into future-proofed investments that are built for this new era, then please book a call on the link below. But if you're wondering how to actually fund this shift, you need to understand the 2026 mortgage landscape. So watch this video next, where I break down everything you need to know about mortgages this year.